Just a little bit about a background about how you kind of got started with doing finance and advising people.
I started in the personal finance industry just a couple of years ago, but I've always been studying it for myself. I've always had the interest in growing my wealth, securing my financial fortunes, and trying to just create a future so that I don't have to live below my means. I believe I can actually increase my means and do so in a number of ways. So that's why I studied it and just got into it with the service members, helping them learn how to budget, figure out what it takes to essentially go the extra mile and making their dollars go the extra mile.
So you didn't start off with having money. So did you start off like most of us, rough background and really having to figure things out for yourself, or did you have somebody to guide you? Give us a little bit about your background and kind of how you came to where you're at now.
Well, I've kind of been in between. Never had a very little amount of money, never had a very lot amount. It's always been just fighting for it, and not really.
So average person.
Yeah, not crawling on the street looking for food or anything. But
gotcha.
I've had creditors calling at points in my life where it felt like, oh, what am I into, man? I'm the gutter right now. But really, I had a place to stay, so it wasn't that. But it was more like just setting up dreams and setting goals for yourself to make it higher than what you think that you can actually be at personally. Like where you're at currently, you always want to make a little bit higher of yourself, set goals, achieve more.
So let's talk about some of the mistakes that you've made with money, right? Because so many of us, have money or maybe come into a certain amount of money, but we make mistakes as far as how to to flip the money and make it work for you. So if you could speak on that.
Well, the number of mistakes I've made are quite numerous. I think that you can really only learn truly about financial hardship from your mistakes, and the way to create and perpetuate the wealth that you want to for yourself comes from the hardship and making the mistakes that you've made. One of them in particular was recent in what we call a scam, an internet scam, typical Ponzi scheme, where you would invest a certain number of your dollars into a high yield account that would net a certain amount into your account every day. It was 1% around that. So I put money away to grow 1% every day. So if I put $10,000 into
so 1% of that amount every day.
Yeah.
Okay. So it's basically just flipping.
And it worked for 6 months. And so I was like, okay, I got to up this a little bit more. I'm looking to grow my wealth quickly. And
so hey, let me put more money into this account and let it keep.
So that's what happened. And then I ended up putting a couple, what I could in there. I don't want to disclose the full amount, but I got wrecked, R-E-K-T, wrecked pretty hard. And that was because the Texas, we live in Texas, so the Texas Securities Exchange Commission came out with this cease and desist order for a company called BitConnect.
Okay.
And they were performing unregulated financial marketing here in Texas, which is against the law. And so they ended up getting the order spread, and it caught like wildfire. Everybody caught wind of it, and we're like, whoa, they're getting a lot of heat from Texas government now. Maybe we should back off on our investments. And what happens in a Ponzi scheme is when you back off of your investments, you don't have enough money to pay the next person. And so their site would go down. They would complain of DDoS attacks where you couldn't enter the website. And sure enough, over time, it just became more frail. The system wasn't able to pay out the new people and ended up collapsing in on itself. Meanwhile, there were people in India that walked away with millions. So it was an international Ponzi scheme that...
So basically they walked away with the money that you were putting in.
Yeah, basically the person at the top always gets the most. And what they had was like a pyramid structure. So the guy that recruited more people got to get their money. So if you were at the top and then you got like layers and layers of people underneath you recruiting others, then you actually get a piece of their money. And so it was a way of recruitment that actually collapsed on itself because apparently there were no other takers that wanted to partake in the system. It's kind of like exactly that, a pyramid scheme, a Ponzi scheme.
So at no point did you have time to pull your money out of this account?
So I got withdrawals probably, I could take a withdrawal every day while the Ponzi was in effect. And then whenever it came to the point where it was just starting to collapse in on itself, I didn't get out everything. I lost about half.
Okay. So was it a process to pull it out, or could you not have just pulled everything out at once?
It's a relatively quick process to pull it out, but the thing is, when you can pull out the profits, but remember, when you put your money into a high yield investment scheme, it's kind of like a CD at a bank where it's locked up for a period of time.
Got it.
And you won't be able to pull it out.
So some of that funds wasn't released.
Correct.
Basically.
Yeah, about half of them. So here's what they did. They released the tokens, because they had these digital tokens that they used as payout that had a particular dollar value to them placed on the open market. So there's a bunch of different exchanges that trade these tokens, and the people that trade them place the value on them. So like they trade them for, at the point when they issued them, to me it was like $350 to $450 a token, and then when they paid them out, it was like 7 cents a token. So when they paid them out, it wasn't nearly the amount of what the token was worth when I purchased it.
Okay.
It's complicated. So the whole system with the digital currencies now creates a whole nother universe that I'd love to talk to you about.
So going back to the comment you made with education and investing in education, right? So I see a split. I see a population of people that still hold on to, hey, education is key. It's going to be the ticket to financial success, financial freedom, to lifelong happiness. And then I see another population of people that say, hey, education is not what it used to be. Like we don't have to invest in education as much as we had to 15, 20 years ago, just because of social network, and the direct to consumer is a lot different now, where education is not as valuable. And we've seen kind of a decrease in education. You see people in college coming out, can't get a job because they don't have the experience. So I think, and my personal experience and my belief is that the experiences that you can get over that period of time that you will be in college studying is more valuable to a company and a corporation. The education is basically nowadays just, hey, I can commit to something, but you leave, you have a diploma, but you have no experience, and companies are afraid to hire you.
It's a good point. Plus, you leave school with, if you don't have the GI Bill,
with a huge debt.
Yeah, you got the student loans and everything that piles up quite a bit.
And the funny caveat to that is some companies, won't hire you based on your credit score. So if you're behind and you can't pay student loans, or you have a huge interest on your loans, now you can't even get the job that you went to school for because you have a huge debt hanging over your head. So it's kind of the irony in going to school.
Yeah, your debt that you take on as a student is pretty significant to where it's difficult to pay off.
Very difficult.
You have to pretty much work an entire lifetime in some cases to pay off that debt, if you're able to pay it off. An interesting statistic.
Even if you can't, in some cases it follows your family members.
Yeah. The student loan debt, if you try to consolidate it and put it into a regular account, then it won't be passed on to the family, thankfully. Because I believe once you die, that student loan dies with you. So it can't be passed on to your heirs. And an interesting point to follow up on that is that a lot of the retirees that don't have enough income, like say they didn't prepare for the low amount that Social Security actually gives them, which is about $15,000 to $17,000 a year, still below the poverty line. And so if you don't have anything besides Social Security at that point, then you need to go back to school, not only to get the education to help you, progress your financial lifestyle, I guess, but also to attain those loans. And it's very difficult to make it $15,000 a year, so you get these loans in the amount of $40,000 a year to supplement the $15,000, and then maybe you can make it. But at the same time, you're accumulating all this debt at an older age, and it's a lot more difficult to pay off.
So, so let's say let's put in a scenario basis. Tax, I just got my tax return. $3,000, $5,000. What would you say would be the best way to invest this money?
Right when you receive that fund, you kind of want to sit on it, examine where your money is going. So you come up with a personal budget. You see where your income, what your regular income is, as well as your expenses. Once you analyze those and figure out where the best opportunities lie, and whether it's improving your own financial well-being, then you can look at other assets and ways that you can invest your money. I would say have that emergency fund in place, 3 to 6 months of living expenses first. If you can put away at least up to 6 months of living expenses in an emergency fund, then what you can do is essentially go into investing in different assets like the stock market or bonds, depending on your risk factor, because we all have different risk factors. Some people would just prefer money market, which is kind of a low risk, a little bit higher yield investment than a savings account. Some people like cryptocurrencies, which is super high risk, or Forex, which is foreign exchange trading, currencies from different countries. And that's really high risk because you cannot tell what every single country's government that produces that currency is going to do with their economic system. So wherever you put your money, you always want to keep it into something you're familiar with. So once you have your budget under control, your savings in order, then you can start looking to, less risky investments.
Okay. So what is your take on foreign business? So you see a lot of people in the industry that kind of branch out from the U.S. Because we're kind of oversaturated with business owners. We're oversaturated with people trying to establish themselves here when it's a lot easier and a lot quicker to do it in a foreign country.
It's an interesting question. I think that the opportunities here are still really large. You can still make really good opportunities for yourself in this country. And like say you found other opportunities elsewhere, then you just got to branch out where the need is. And also it's dependent on what kind of business you have. So if you're having an opportunity to help the needy, to build wells in Africa, whatever it is to bring food to Venezuela, or a different kind of payment system where they can actually transact and not lose value in their currency, whatever the options or the opportunities are for you to get involved with, you just got to be aware and take them. If they're open for you, you jump into it. And we are in a world market, like you said. It's not all just regional based. Everything can be applied, usually what it can here, to other places in the world. So you got to find those opportunities.
So how do we go about finding those opportunities? Because a lot of us have not traveled that amount of distance, and it's foreign to us. So
the internet usually is your best bet to do the research and then figure out what other people are doing. Really build your personal network.
So just networking?
LinkedIn is a good place to look at what other professionals are doing and where they're getting involved and kind of pushing their efforts. And then if you like what they're doing, if you like to see that, then you can just reach out to them. It's so easy on LinkedIn just to click at the connect button and then say, hey, how you doing? What is it that you do? I'm interested. And then sure enough, they probably got a minute, they can answer you, and then you can build that relationship, that network.
So what you're saying is look for those people on LinkedIn or social media that are, in the business of what you're trying to do.
That's a great idea, yeah.
Okay.
I didn't say it, you did. So.
All right.